Hey, what's up, everybody? Paul Brands with your Monday market update. How you doing? Did you have a good weekend? I know I did. I gotta tell you, I'm shocked at how many people are out there getting pre-approved, looking at houses, especially during the holiday. And by the way, I sent a video out, I think it was last week, why December tends to be the best month. That's right, the best month to be a home buyer. Why? Well, just reach out and I'll send you the video, but it has a lot to do with just everybody slowing down. There's a lot of houses right now on the market that have been there 60 plus days. These are houses that you want to reach out and start negotiating either price reductions, but the smart buyers not only are getting price reductions, their real focus is getting their closing costs paid for and even getting their rate bought down. Because remember, 30-year fixed rates, if you look at almost all the projections long term, they don't really see rates going lower than upper fives. That's probably the best I've seen. Challenge me on that. I would love new data. But today, with the seller paying a point, which you're going to see here in a second, you can get a rate in the mid to high fives and just set yourself up perfectly for short, long-term success. And by the way, they're projecting single-digit appreciation everywhere in the Bay Area and most places in California. And if you want a specific appreciation report for where you're looking to buy, just reach out. I'd be happy to send it to you. But the best part about California, great wealth can be accumulated by single-digit appreciation. We got a big week. The Feds are meeting on the 10th. There's a 70% chance, I think, as of right now, that they're going to drop the short-term rates by 0.25%. But remember, that does not mean that 30-year fixed rates are going to drop by 0.25%. In fact, if you look back at the last two times the Feds dropped short-term interest rates, 30-year fixed rates actually went up. So keep in mind, stay alert to some of the updates we'll send out. And the thing that the market's going to pay attention to, just as a little heads up, is if the Feds do drop the rates 0.25%, the bond market, that's where the 30-year fixed rates are traded. They're going to pay very close attention to what the words are spoken by the Feds after that price reduction. Okay, so what do you say we get started? Let's take a look at today's rates. So if you look at today's rates, now one thing I want to share with you, these rates that you're looking at, they do come with 1 point cost, but the reason I'm sharing points with rates with 1 point is if you're out there looking to buy a house right now, as I just alluded to, you can get a seller to pay this for you. This is huge. So like right now, VA rates 5.25, FHA 5.25, conventional and jumbo are both at 5.875. These are far lower than where they believe interest rates are going to be. Now, speaking of which, if you're somebody out there that is looking to refinance, now's the time to really start looking. We want to figure out what your target rate is, what a target rate is. I know we all want the lowest interest rate, but here's the deal. None of us, not even me, not even whoever knows, I don't know why I said me, knows when the bottom of the rates are going to happen. But one thing I can tell you, by doing this for 20 years, once the bottom hits, the lowest rate happens. When it shoots up fast, and you may not have the opportunity to refinance. A lot of people missed out on the low threes, high twos, because they were waiting for something lower. Okay, so let's talk about what happened last week. Remember, unemployment is one of the key factors, along with inflation, that's driving these interest rates, or inflation. Because remember, inflation is the kryptonite to 30-year fixed rates. Last week, ADP employment came out. You know, it's heading, I hate saying this, unfortunately, it's heading in the right direction as it relates to interest rates. This is all interest rate friendly news. However, I want to be very sensitive to the fact that this isn't really great news for families, because employers are cutting back pay, people are not hiring as much, and we're starting to feel this in the economy. Now, as it relates to inflation, PCE came out last week. Headline came in at increased month over month by 0.3, the core by 0.2. You know, we're at that 2.8, both headline and core, which is right in line with where the Feds want to see it. So nothing shocking there. The inflation and unemployment are all heading in that right direction to support lower 30-year fixed rates. What do we have this week? We have a big week. Tomorrow we have JOLTS. which is another employment data. That's something that can definitely move the market. On Wednesday, we have the Fed statement, the press conference, and on Thursday, we have initial jobless claims. These are things, this could be a very bumpy week. If anything radical happens, I will send out some info for you. I got your back. Here at Clear to Close, we got your back. And speaking of which, if we're not working together, why? And if you're a family out there that's looking to buy, sell, and maybe you're not even ready yet, but just want some information, we have what's called a hopes and dreams conversation. A hopes and dreams conversation, there's no applications, there's no credit pulls, there's nothing. Just using me for my 20 years of experience of helping families save money on their mortgage. I got you back. No, so reach out, set an appointment. And by the way, if you are a realtor out there or a family looking to buy a house and it's a Saturday night and you need something quick, I'm your guy. If you're looking, I'm working. Ooh, I like that tagline. That's going to be my new one. If you're looking, I'm working. Paulo Rance, Clear to Close, bro.